We're ready to go.
Want to clap?
And we're live. So we're sitting here today with myself, Jeremy and Angus, who you guys will be familiar with at this point. And we have a special guest today, Mr. Greg Rubin in the flesh.
Super TV star now.
He's a consistent makes consistent TV appearances to discuss financial markets. He's particularly an expert in the areas of metals, and he's here to speak his thoughts on the current state of things.
And cryptocurrency.
An Elliott Wave statistician.
Pleasure to join you guys on the show today.
How many years experience do you have as a trader?
13. Started in 2007.
And have you ever seen any kind of market dynamics such as the ones that we've seen in the last couple of days?
Honestly, what we're seeing now is crazy. It's something I've never seen before. Even looking at the crypto move in 2017, it almost feels as if we in a similar zone at the moment, similar instance where the retail traders are going after the small stocks, taking on Wall Street. It really is crazy.
And I mean, we just want to basically articulate what exactly is happening, because there's a lot of hype around it. I'm sure 99% of people watching this would have heard in some form or another what's going on. But just in a nutshell, over the past couple of days, there has been a Reddit feed by the name of Wall Street Bets, which has kind of gone off the rails, with the goal of basically identifying stocks where big Wall Street hedge funds have big short positions, and effectively pumping the price up through getting a collection of retail investors together to all buy the particular stock.
And when we say collection of retail traders, there's about 5 million people currently subscribed to that Reddit. Subreddit, I should say.
And it grows by the day.
Yeah,
It's incredible. And effectively what they're doing is it's basically a big middle finger to Wall Street, in the sense that here you have these multi-billionaires running these huge hedge funds, who have access to information and operation advantages in terms of their analytics, who are meant to be the best stock pickers in the world. And basically they've gone ahead and artificially, if you will, pumped up the stock by way of creating this groupthink where you get hundreds of thousands or potentially millions of people to buy the stock and artificially move the price up, which in effect has causes the short sellers to have to cover their position, which is what leads to what's known as a short squeeze, where basically as the market moves upwards as a result of intensive buying, you then have a scenario where those people who shorted the stock have to then go and cover their positions by buying the stock, which causes further upward mobility on the stock, and ultimately is really causing a lot of damage on Wall Street.
and if I may, just to give like a quick stat, I heard that Robinhood at the moment has about 13 million active traders on their platform. About half of those, so about 6.5 million people, had a position inside GameStop.
Really?
Yeah.
It's amazing.
That's
It's worth adding, and I think something that's quite important. It's not as if they're going after random stocks. It's not as if they are planning on trying to push a stock higher for price. They're literally going after Wall Street. And if you look at the stocks that have pumped, they've picked on all the stocks which have very big short positions, with the hedge funds, banks have incredibly big short positions, and they're trying to create this short squeeze.
it's like big game hunting.
But this is the beauty of what if you read the actual Reddit feeds, what becomes very clear pretty quickly is most of the people who are buying this stock, who are jumping on this bandwagon, are actually not looking to make a profit.
Correct.
They're actually just willing to pump in money for the sake of almost making a meme out of a stock, making Wall Street the laughing stock by effectively just putting up the middle finger and saying screw you. When in essence, their goal isn't even to make a buck. It's purely just to say F you.
But are you surprised? And the reason I say that is you look what we've had during this Corona drop. We've seen the market drop, economies drop, people don't have jobs. And what has the Fed done? What have the central banks done?
Who's made money here?
Correct. They've saved the jobs of your hedge fund managers, of your stock runners. Essentially, the people on $1 billion and millions of dollars, their jobs have been saved while everyone else is struggling.
Yeah, the government doesn't bail me out when I get a margin call, do they?
Correct.
And that's in my view is the very mentality of the young traders who are really causing all this momentum. It's people who either their parents got screwed by the '08 crash, or are affiliated with someone who was affected by it, and are basically saying, where was the government for me? The government can bail out all the major hedge funds and all of the major investment banks, but when it comes to everyday people who have everyday needs and requirements, where was the government to help me? And you tell me this, Greg, you were kind of around during '08. Do you think what happened with coronavirus, when obviously the stock market crashed, when we just got hit with the pandemic, and shortly after the Fed announced trillions of dollars, with the biggest stimulus package in the history of the world, do you think people almost are likening this scenario to what happened in '08, and this is almost like the next generation version of '08, which is causing this, this mentality
You mean Occupy Wall Street?
Correct. Or this anti-establishment, anti-Wall Street sentiment, which is we don't even care who makes money. We just want, as long as these guys lose, we're happy.
I think it's different. I think when you go back to 2008, you were dealing in uncertain times and sort of the unknown. And the Federal Reserve, Bernanke at the time, went down this path of quantitative easing, of stimulating the economy. And people didn't know. People took it on board. We're going, okay, they're saving us. We're going to sort of push the economy higher. We're sort of going to help the economy out and sort of see where we go. A lot of sort of economists were wary of what they were doing, taking these sort of unprecedented steps, but nobody actually knew where we were going with this. Whereas now, how many years later, 12 years later, almost 13 years later, and we still haven't seen the signs of inflation that we were expecting, the economies have not recovered. We've seen stock markets pump, we've seen asset bubbles being created, and this is where the disparity comes from. And, not linking it to sort of what we've seen in America, but you look at President Trump, who sort of came on board with how great the stock market is, how great the economy in the US is, sort of saying how impressed he is with everything during the heart of Corona. Now, you at home watching this, having lost your job, having not strung put food on the table, and your president is boasting how great the economy is, how great we're doing.
Great, but for who?
Right.
And these are like the forgotten or the untold individuals who were left behind by the rally of the stock market.
Totally, but even look at this whole Black Lives Matter movement. That's sort of stemmed or sort of created from enough. Stop telling us how great things are. Things are not great. Things are great for that 1%. Now, when you look at this, the Wall Street guys, the small guys who have started this sort of movement, the Wall Street's bets, they've had enough. Why should Wall Street keep getting saved?
So it's the perfect storm, effectively. Here you have...
The thing is, Wall Street's not getting saved. Like, this hedge fund wasn't saved. No hedge fund gets saved by, the Fed. So this, hedge fund was bailed out by another, fund or hedge fund, not even, it was non-bank. So I think it's really just hunting for sport because, they're bored and they know that this guy was obviously smart enough to know that someone was way too short. We see the exact same setup in Billions. Maybe he's just watched the show one too many times.
Got inspired.
He's just seen it one too many times and he's like, fuck it, let's just do the same thing. And they were incredibly successful at it.
No, but it was out of frustration. It came out of
But
frustration.
if they were giving them middle finger to Wall Street, then they picked the wrong kind of example.
I mean, here you have a guy...
They're just starting now. You can see, looking at the forums, how they've started with the stocks and going after the certain stocks. But don't forget, the stocks they're after are the ones with the biggest short interest position. They're looking at Wall Street. They're looking at the funds, the banks, where they are the shortest, and those are the stocks they're attacking to force them out of the market.
And what's interesting as well is that, there's a big meme mentality behind what's going on.
It's a meme culture.
It's a meme culture. If you look inside Reddit, specifically as a platform, 4chan is kind of crossed over. A lot of memes happening over there. And if you look at what happened, everyone's kind of now, looks like anyway, they've moved into Dogecoin, which is one of the most memeable coins. It has absolutely no use case. I think last time I checked, it had an $8 billion market cap. $24 billion was traded inside Dogecoin in the last 24 hours. So this meme mentality is like now gone into the memest of the meme coins.
But what does Dogecoin represent?
Memes.
But you're right. But also, everyone knows when Dogecoin pumps, the alt market pumps.
Sure.
It's like the ringing of the bell, that alt season starting.
Yeah. And by the way, this is where I think a lot of there is some misconception with respect to what's actually going on. So, there is definitely a big meme culture, but ultimately the ones who started this actually were quite technically, or at least fundamentally sound in their approach. There were guys who really triggered this on the Reddit feed, specifically on Wall Street Bets initially speaking, who actually, did have, long positions on GME for quite some time. And it was, like you said, the perfect storm coupled with everything, led to this bandwagon effect where everyone jumps on board. But I think it's also time that, it's almost like a message to Wall Street that just because we may not be analysts sitting at Goldman Sachs does not mean we do not have the ability to use our own technical and fundamental analysis.
This is not analysis, right? This is because it's not like the stock should be valued at a certain level. They took it for a run because they could.
So the question is this just a typical pump and dump, or should anyone out there be able to trade on the free market as they wish? If you want to buy something, it's your risk.
I say like live and let live, but there's it presents like unique risk to the system.
Yeah. Do you guys think we're going to maybe see some more decentralized exchanges popping up and one of them actually taking hold, and then something that's almost ungovernable because it's completely decentralized and you have all the different servers hosted in the cloud or through blockchain or whatever it is? You can imagine a platform where you can't actually have any government.
I think so. If you think about what's happened in like cryptocurrency, and they can create hysteria and they can make Bitcoin double. Really, it's much, much, much easier to do that with a stock. You can make a stock go up thousands of %, because it's a liquid, and there's only one exchange, or like there's one market versus
there's incredible market access
really
now.
decentralized, and there's all these liquidity constraints, and it's also incredibly risky to like trade crypto unregulated. So perhaps they've just realized that like we can do the same strategy, pump and dump.
Also, it's the most mainstream,
and they can use market microstructure and hedge fund short positions to basically help create the traction they need. Maybe they're a lot smarter than we think.
It's not even about being smarter. It's about the sheer size of them. Every day you look, they're growing, and people are joining the movement. It's a revolution.
It's a revolution.
People are joining. And the more you're sort of seeing the fight back from the sort of exchanges, from the banks, the more people are going to get riled up and the bigger it's going to become. So
do you think this is going to be a massive spillover into crypto? Because if you've got Robinhood and some of the bigger brokers out there stopping and halting trades and saying you're only allowed to exit a position now, in crypto I can't ever imagine Binance, for example, saying, sorry guys, this has run up too much. We're going to stop trading.
But they'll
on
certainly
it,
delist something, right?
Right.
They have delisted in the past.
What about Ripple?
Not for something like that, because it won't be a sort of breach of regulations. Otherwise, Dogecoin would have been delisted by now.
Yeah.
But all jokes aside, you're right. This is what essentially when it was created.
It's like the next level of it, hey?
It's almost accelerating what was already, kind of taking. What's interesting to me specifically as a younger person who has a keen interest in financial markets is that, you have the whole Occupy Wall Street post '08, where I feel like a lot of the people who kind of took, that movement, took action there. It was a lot of protesting, a lot of, try to lobby behind the scenes, build together this, this revolution that was based around almost, using, verbal communication methods to get the message out there. But there wasn't much done in terms of actual taking action against Wall Street. Now you have a new young generation with incredible access to information about financial markets. Any Tom, Dick, and Harry from his bedroom has access to Investopedia, to the internet, where they can learn a lot about financial markets. There has never been more access to the equities market, in the history of the world. And now they can really take action that will, that can cause, a pain in the butt to the big boys on Wall Street. And it's incredible.
I also think that there's a bunch of nerds like us, not like we also have the same thing, but a bunch of geeks that, got into crypto really early on and had just amassed hundreds of millions of dollars that they can now play with. And, they don't
or
mind
they just got
going
their
and
stimulus
chucking
check.
in
Or they
a
just
couple
got
of
their
$1 million
$600 stimulus
this
check.
is it.
Yeah.
They've all made so much money on the game stock right now. They've got bigger pockets to play with.
Well, you have one guy just over
The
there.
army's getting
the
stronger.
headline, this one guy, Roaring Kitty, the YouTuber from Boston, who
where it
was
all
one of
started.
one of the guys who started all this. He made close to $50 million.
Unbelievable.
Yeah, he put in-
How many
Unbelievable.
days?
He put in 700,000, I think.
It was a matter of 2 or 3 days. I mean, tops. It's crazy.
Incredible.
Yeah,
Incredible.
I made $150 million on it, but I don't know why I'm still here. Maybe I'll just I wish.
So I guess, look, so now what's happened has been, articulated pretty clearly. Obviously, so you had these guys on Reddit who, by way of groupthink, caused the stock price to pump up, causing a short squeeze, which now causes the hedge funds and the big boys to react. So I guess, the question is now, how did they react? Well, the way they reacted is by, you have Gabe Plotkin, the head of Melbourne Capital, was one of the main hedge funds that, this particular attack, if we'll call it, kind of took fire and aimed at. There are articles, and reporting that came out which basically says that Gabe Plotkin contacted, the head of Citadel, and effectively applied some pressure for the head of Citadel to get in touch with the brokers such as Robinhood, Interactive Brokers, and others, in an effort to put some form of restriction on, retail investors buying the stock, to basically stop the bleeding. And there has been substantial reporting now, which is coming out, showing that this is in fact what happened. So you have pressure from the hedge funds onto Citadel. Citadel places pressure onto everyone from Interactive Brokers, Robinhoods, TD Ameritrade, and so on. And then the brokers themselves come out and say, okay, we're going to put some kind of restrictions.
Sorry, just to clarify, they put pressure on them because these are the non-bank market makers who are allowing commission-free trading to take place.
Correct.
And
And
so therefore, the brokers need them in order to.
well,
offer this
just for
product.
I saw a statistic online that around 60% of the equities, in terms of the equity volume that's traded on Robinhood, is processed through Citadel.
So if it was a normal market without commission-free trading, this actually wouldn't have happened.
Right.
There'd be no conflict of interest and no one holding the other side of that trade.
Correct, but in this case specifically, we have Citadel, who is obviously of vital importance to to the success or the ability for companies such as Robinhood to exist. When they apply pressure, the guys at the top of Robinhood have to listen, and that has a flow-on effect to investors. Where now they've basically put these restrictions where you can't buy or sell. All you can do is close your position if you hold, and there's a list of them. You have your GME. EXPR, CTR, and a list of symbols which were targeted and taken aim by the Reddit users are now restricted on these trading platforms, on these electronic trading platforms. So retail investors are basically not able to buy or sell these trades. And effectively, what this does is it puts a band-aid and it stops the bleeding, so that Wall Street can kind of regroup, cover their positions, and force the share price down, which is exactly what happened because the share price closed significantly lower than it was early in the day after this announcement came out. So I guess the question now becomes is that I mean, you can ask, is that legal? Is that ethical? But I mean, it almost seems as if the big boys are winning yet again. I mean, how do you reconcile that?
So this is something that's not unique. I remember quite clearly trading metals when silver was sort of pushing towards that $47, $49 level. All of a sudden, margin rates kept going up. So the move from $40 every day, margin rate up 10%, margin rate up 10%, and they kept, same with gold, squeezing the longs out of the market.
And they cover themselves by saying this is a result of capital adequacy requirements. We have to maintain certain capital adequacy if we want to work with the SEC. All this.
You can dress it up how you like.
It's incredible.
The gist of it is, who was caught very short silver at the time? JP Morgan. So there was a bank under pressure. They inherited a book from Bear Stearns, and the bankers were under pressure. They were short. They didn't expect it. And in this case, it wasn't the little guys. It was the gold bulls, silver bulls squeezed.
Devil's
banks.
advocate. There is span margining, so as volatility increases, then it is expected that margin rates do go up.
Sure, but when the market dropped at the same rate, that didn't seem to get pushed down.
But it's volatility. It's volatility.
But nobody's going to turn around to in this particular scenario, I don't think, and say, there was genuine capital adequacy concerns, which is why
it doesn't matter if there's capital adequacy. Yeah,
it was unprecedented. It hadn't moved before. All of a sudden, it started pushing higher, and then you saw that the margin rates were pushed higher. Now, when there was same volatility on the downside, there wasn't a change at all within the margin rate. It was a clear attempt to slow down the price as the bank was under pressure. I mean, silver moved from about, if I remember correctly, $18, $19 to $50 in 4 or 5 months. Now, you got a massive short position. There were rumors that there was going to be a run on silver. There were rumors that the bank was under pressure. And again, the big boys came out, saved the bank. Silver dropped to around $16 a year later or whatnot, and sort of spent 4, 5, 6 years in the doldrums in that sort of $16, $20 range.
It almost seems like the system is built by design so that the big boys always win. And there are, fail safes and mechanisms in place that are there by design to ensure that the ones at the top stay at the top, to the expense and to the direct expense. Because again, if you're a retail trader and you've been benefiting from this run, and now all of a sudden you lose your access effectively, simply because the guys at the top put some pressure. I mean, that almost seems like it's a zero-sum game.
The retail traders are up in arms about this, and it's not like they're just sitting on some forums and having little chats between themselves on industry-specific forums. It's on Reddit. There's 5 million people there.
Well,
it's all over the news. Senators talking about it. This is huge.
But that's just, to me, it should be a level playing field. Why can't the little guy make money? Why can't the little guy be successful?
Because if the little guy makes money,
He's making it, from
it
the
often
big
comes
guy,
by way
usually.
of, to the expense of the bigger boys.
I don't want to go into what goes on in the marketplace or what we see, but it's not the first time we've ever heard the word
we'll have to bring you onto the A versus B series for that one, I think.
we definitely, it's not the first time we've heard the word manipulation in the marketplace. In fact, if you look at all the recent lawsuits, you can go through every one of the banks, they've got a lawsuit for manipulating, whether it's FX, whether it's current, whatever sort of market, the bond market, metals. They do it on a daily basis, but when they do it, that's not a problem.
Yeah.
And when they get a fine, it's minuscule compared to the returns that they make.
So when you have investor activists, it's usually that they're like the free hand of capitalism. Like GameStop's overvalued. We'll come in there and smack it down to reality, and it'll eventually go out of business, right? So they see themselves as like the hand of capitalism. Allocating capital and prices, whatever. But then you've got these guys, and I love what they're doing. I think it's pretty cool. But I think it's awesome.
We're going to call financial terrorists.
Yeah, like whatever. Like,
But what are they actually doing? They're trying to profit from
God
a market.
forbid they make some money.
But
What
this-
do the
this is the type of
bankers do? They
activism.
collude together. They go, right,
But one
today we're
second, so
playing
then
the
tell me
stock.
this. I mean, how is it okay for short funds or hedge fund managers to get on TV, get on CNBC, and have their forensic accountants come on there and completely destroy a company's financials in the hope of basically driving down the price? And you can literally see in real time as the the team is on CNBC making this presentation where they've done all their forensic accounting and the analytics. You can see in real time the stock just tank. How is it okay for these guys to do it, but a couple or many or a group of even thousands of regular everyday people who jumped on a bandwagon on Reddit are not able to effectively do the same thing, which is completely legal? There's nothing stopping a group of people from all buying the stock legitimately at the same time.
So there is a borderline mark on there, whether it's legal or not. There is a bit of a grey area, because if you were in a group to buy a stock for the sake of, I want to buy the stock for X, Y, and Z reason because of the stock, there's nothing wrong with that. But if your sole purpose is to buy a stock to squeeze short out the market, to take down the banks, you're not buying the stock because you want the stock. You're buying it. It's called market abuse, market manipulation. And that's what they are doing. It is market abuse.
Isn't it like a really fine line in terms of
No,
like,
if
how it's
you're buying a
presented?
stock because someone's short, that's not market abuse. That's basically like
I mean,
it's life.
Not that it's sure, but you're buying the stock with the sole intention to push the price.
but the markets allow for that.
But it's like this is
Yes.
what do you think algorithmic trading does? It exploits inefficiencies in the market, liquidity in certain times. That's what it's doing. That's what market making algorithms are doing.
Correct, but you're
like, at all
colluding as a
times.
group to do this, to stick it to Wall Street.
But if I'm a hedge
Aren't the hedge funds colluding as a group to
but
short
if I'm a
stock?
short fund and I'm on CNBC and I know I hold massive power and influence over the viewership of that particular program, and I know because historically, and there is massive data on this, as I'm going to release this report, the stock is going to take inevitably, right? Why is it any different or any better, any worse than what's going on currently?
Because you've got a
on the
compliance
retail
department that
front?
understands the rules and has told you
Well,
what you can and can't say
jumping
to the
through
point that it's
loopholes.
okay.
They just manipulate because they have better access. But ultimately, it's the same concept.
Could you imagine trying to regulate this though? Regulate the conversation on Reddit, because there's already
You start getting into free speech and all that.
I hate the idea of censorship, right? So it's becoming worse and worse. But if you try to do that with just people talking about a stock online in a forum, that'd be the end of it, though, right? That'd be the end of
You're not allowed to talk in groups on stocks.
yeah,
More than two
imagine
people,
trying to
not
stop
allowed.
that.
You are allowed to talk in groups. There's
sorry,
a
just-
difference.
You just can't actually buy.
One
because
sec,
you-
just quickly. I can't remember who said it, but it was someone up there. They're basically saying that they're potentially looking to stop and halt trading on any stock that has chatter online.
So 1 second. So 08 happens, and a couple of guys at the top of Wall Street completely destroy the economy, and we didn't rework the system in any meaningful way. But a couple of a few retail traders made some money in 2021. Now we're talking about reworking the whole system.
It's crazy, and I agree with you. I'm totally on board with the fact. I think it's disgusting what's happened. I think it should not be allowed that they've been stopped. When I get short squeezed, nobody comes and saves me. Why should a bank or a fund with billions of dollars get saved when a bunch of millennials are squeezing them out the market?
That's how the system works at the moment. And the question is, can things change or do things stay the
I
same?
think the risk now is that they don't understand, because if it's a short squeeze, you've seen billions, we've all seen it enough times. You might know who's on the other side of the trade and who's this happened in the natural gas market, the oil market. It's happened everywhere, right? They realize someone's long or short and they get squeezed out of position, and you can have spectacular blow-ups. It's happened for decades. So in this case, what is different is that they don't know the size of the hand that's trying to squeeze the position. It's like a few million retail punters. What if it grows from the US?
What if it's 50 million? What if it's 100 million people?
Well, by the way,
Exactly. It goes to
this is a
China.
global phenomenon, because there is a stock listed on the ASX with the same symbol GME, which is a resource company, completely unrelated, and their stock shot up about 30% because Australian retail noob traders didn't realize that it wasn't the same stock. So I mean, this just goes to show you kind of the global psychology of markets and the power of this particular groupthink right now.
So I tell you what I'm looking forward to is it was all over Reddit yesterday with the attempt to take on the silver market.
So is that possible?
No.
Do you reckon they can move it?
So this is what is fascinating.
They're calling silver to $1,000.
They're attacking the bullion banks now.
Well, this is it. The bullion banks are considered.
But this is when it gets real crazy, though, because this is like a market that's fragmented. It's got supply. It's got futures.
Yeah, and there are
it's
real
got-
delivery requirements.
It's
No, but hang on. Let's take a step back. This is really,
Okay, the
really
expert.
fascinating.
Yeah, I was going to say, let's hear from the guy that actually knows how it works.
This is really fascinating because there's been for years belief that the silver is the most manipulated market out there. It's very undervalued. You look at gold, it's above its 2011 high, where silver is just about half of it right now. So we've seen it time and time again. Silver get pushed
just to
down.
provide context for those who might not realize kind of where this segues into. Basically, what we're seeing now in the markets is similarly to what happened, with the Robinhood investors and Reddit. There's a similar kind of thing that's playing out now in the silvers market, where you have these big bullion banks who have huge, metal positions, and you have, these traders trying to take the other side and basically cause another short squeeze.
So what you've seen in the bullion market or with silver is common belief that JP Morgan, amongst others, whether it's true or not, are massively short. They almost got run over when silver went to $50, and it's almost a never again. And any time it sort of showed signs of strength during sort of quietened periods, we've seen it sort of being hit down. So a lot of precious metals bulls are adamant it's the most manipulated market. Silver should be significantly higher, and I do tend to agree it should be significantly higher. Now, the Reddit post was, why don't we take them on? And I had a good read through it. He mentioned all points that's very common amongst silver bulls on why this is the time to take them down. And the big question is, are they big enough to take down a big bank? The market is a lot bigger than a short illiquid stock. But what people are underestimating is besides these Reddit users, there are a lot of precious metals players who would like nothing more than a squeeze on metals. And metal traders are almost cult-like as well. So they'll get a lot of support from gold bugs, silver bugs, and them combined with this new movement is a lot bigger than you actually think.
It's a force to be reckoned with.
They'll find allies in the precious metal bulls because obviously being around metals for a long time, and I hear this chatter from many a metals trader who just can't take it anymore. They're so convinced it's being manipulated. They'll join this movement without doubt.
Do you think we're going to see a point in time where B-book brokers who take the other side of the trade are going to get to a point where the power of the crowd is so strong that everyone just gets it right and they just get stuck with their pants down?
I think when that happens, that'll be the end of the
end of the world.
The end of the industry.
Yeah.
I mean, that's the problem.
There's the potential there to be an incredibly large
massive blow up.
Yeah. I mean, the whole thing is built by design to prevent that very thing from happening as well.
And we nearly saw that in 2017 with cryptocurrency because you couldn't hedge it.
That's right.
You couldn't keep collateral with an exchange because no one trusted them at that time.
So just
so brokers internalized
everything.
A lot of brokers just stopped offering it because you couldn't take any more trades.
And everyone was just buying, right? No one was selling.
But some brokers just took blind bets and they almost went bankrupt in the process. So, and we're talking like hundreds of millions.
There's a lot of damage to be done if enough people get behind it.
Yeah.
Interesting.
If these traders knew what they could do with a B-book brokerage in terms of liquidity arbitrage, then...
Well, honestly, from all this, they're kind of understanding that someone else was on the other side of the trade in order for their trades to be effectively shut out of the market. So I think you're going to be seeing a lot more people that understand the idea of zero-sum game and someone being on the other side of your trade. They might go and look into, trying to arbitrage or do something on a B-book broker.
But this whole squeezing in the silver market, I think that would be very dangerous, more so than stocks because it's a leveraged market.
Yeah.
There's a lot of leverage built into it, right?
So even sort of take a step, take it from another angle, should I say, there's a lot of rumors that with all the big short positions that the banks have, that there isn't even the gold or the silver in the actual COMEX if there was a run on the metal.
Really?
It's like USD tether. No one really knows how much money's in there, right?
And that can really cause that episodic, hyper volatility because just like we saw in Corona, right?
What happened with gold?
Great example.
Right.
If you look at Corona.
That was.
Just by the way, that quote was some Guardians of the Galaxy shit right there. Best soundtrack of all time. Whatever you just said, I don't even remember. It sounded really good.
That silver.
Episodic, did you say?
During the
episodic,
Corona, the difference between the physical price and the actual price that you saw on your screen was something like $6, $7, $8 at one point. You're talking significant percentages. So,
What, due to the supply shortages?
well, the physical market was tight. All these massive created short positions weren't really reflected in what's happening in the physical. No one was selling their physical metal. So the physical market was not budging. You try to buy a coin when silver was at $11, you're paying $20 for, $18.
If this silver thing does come to fruition, I'm glad I'm sitting next to Greg because, yeah, like I did miss the crypto boom definitely, and this stocks things, I'm not even going to try and look at it, but metals.
You can get
You're
on
ride
board.
the wave.
Well, I mean, it's a lot easier, right? You can just fund a trading account and away you go. But
Well, I'd say
everything else is more difficult.
If these guys take on silver and the metal bugs join in, it's going to be carnage because they could take down a bank. And even if they don't take down a bank, you can imagine the scale.
But if they did take down a bank, that would be the next global financial crisis, easily.
So, yeah.
That would shut down.
What if
global
all the
markets.
money in crypto just coordinated, suddenly decided to go into gold?
It would be a stampede.
I don't think that would do that. That's kind of like sacrilegious, right?
Yeah.
Yeah, it is.
For cryptocurrency to kind of switch into a precious metal,
But again, we're dealing in cult movement right now. Right now, it's all about taking down Wall Street.
right?
So I got to say, like technically on the charts, if you look at Bitcoin against gold, in end of 2017, when it was like the top of Bitcoin at that point, before obviously we made the new high last year, there's like a point in the chart where you see gold against Bitcoin, going down, 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 and then it comes up again. And that last point of, support is where gold against Bitcoin is at the moment as well. So I'm kind of watching that level because I just have I just have this thing,
Sneaking
Can you really-
suspicion.
Yeah.
Gauge anything from gold versus Bitcoin chart?
I don't know. You tell me. You're the trader.
The crypto guys certainly do.
Yeah.
I mean, they like
Which
to
crypto
find
guy?
levels anywhere and everywhere. But
They like to find anything to tell you that cryptos is better
correct.
than
Yeah.
metals. Look, they're very different in the sense cryptos are not here to replace metals. Metals will be here for the long haul.
Well, some people are calling Bitcoin digital gold as its only use case.
Right. You see a lot of this. You see a lot of people saying that gold's opaque, gold should be
Well, I'll tell you what.
use it. Look, it's been around throughout the history. It's not going anywhere. There's a place in your portfolio for cryptos. There's a place in your portfolio for metals. It's not even there to.
And there's a place in your
replace it.
portfolio to go and study Greg's teachings in the Discord, right?
That's
Little
a place in
plug.
your heart.
And there's a place in everyone's portfolio for Dogecoin.
That's right.
just before we kind of move on from like cryptos and metals specifically, right? There's kind of this perception that's emerged during Corona. A lot of people had questions about specifically Bitcoin or what is the place of Bitcoin in financial markets. And to many people, the answer became a little bit more clear in 2020 when it almost became like it's a hedge against the conventional financial system as a whole. Right. So, you have big guys like the head of social capital coming out and saying if you've got 1% to put 1% of your net worth should be put into Bitcoin, at least as a hedge against, conventional finance, which is all kind of run by the same people when you risk, the whole thing collapsing. At least you have something over there as, as a direct correlation against
I heard someone say crypto or Bitcoin is too risky to have in your portfolio and too risky not to have in your portfolio.
It's a great analogy.
I mean, so the point is now, do you think that what's going on now in financial markets, instability, the volatility, what's going on now, how it's become such, it's at the forefront of a lot of people's minds. You have a lot more market participants due to the access that's now afforded to retail traders. Do you see a big, potentially a big uptick in Bitcoin, as people look at the financial system as very fragile and potentially something that can indeed be brought down?
I mean, I think what you're seeing now is very much a follow-on of what we saw in Bitcoin after it sort of came into fruition, after it started sort of pushing after the financial crisis. We sort of moved from cryptos, Bitcoin, to taking stocks down now. But it's the same concept. It's the same mindset. People are fed up. And it comes from the millennial side, sort of people, the younger generation. And the truth of it is, this is the future that the Fed and other central banks are taking away. You look at where interest rates are right now. They zero. To save money in this environment, it's very difficult. You're not getting that interest at the banks. You look at the job markets, you look at what the cost of inflation with housing markets right now around the world. For a young person, it's hard to get work, it's hard to save money, and it's hard with the cost of living going higher to buy the assets, which were historically from a sort of ratio relative sort of salary to buying a house.
Quite attainable and achievable.
Correct.
Historically speaking, yeah.
Now it's very difficult if coming with fresh money from university to working to.
So back in the day, you had money and you invested, you put it in the bank, you make a couple of percent or, even more than that in a
I think
day.
it's pure FOMO.
Yeah.
Let's like, if we're real, more people know about it now than ever because of crypto. So people all of a sudden realize that the next neighbor got, ridiculously rich. you know, what my mum even knows about Bitcoin. I'm like, Mum, just leave it alone, right?
Well done for stopping her making
She's going
money
to
this
get a call
year.
from a telemarketer from overseas.
There was a
pretty
photo of like, you know, Thor, right?
Yeah.
You know, saying buy crypto. And she asked me, should I do it? And I'm like, fuck no. Like, it's a scam. Just don't do it.
Yeah.
Not crypto necessarily, but whatever was being pushed at the time. But because everyone knows about it, like everyone wants to jump on that, you know, train.
But what caused it?
It's
What,
FOMO.
what was the motors behind it?
Well, the greatest, you know, gold rush in modern history, which was Bitcoin. Everyone all of a sudden, like, because that's the only thing that's made any kind of incredible return in the last, you know, couple of centuries, right? The whole world knew about it. Anyone could have jumped on it. Lots of people became schoolionaires. It's an entirely new market.
There was ICOs where people were just like,
Yeah, but
all you have to do is
hang
chuck
on,
some money on ICO and make,
that wave
you know,
got
10x
washed
return.
out.
Yeah.
That 2018-19 drop.
Yeah,
that
but
they got
now
completely
you
washed
have
out.
some institutional money getting involved, which is only given Bitcoin, in my view, more validity.
But no,
don't get
that
me
was
wrong.
just a wave. That was just a wave.
I
Then
think we're going higher, but to sort of think, well, we all made all those people who were going on in 2017 on how much money they made, majority of them got wiped out.
Myself included.
You know, that euphoria turned into pain very, very quickly. So, you know, if we kept going higher in that straight line, then you would have had everyone join in and it would have still been euphoria.
All the people that were contacting me in 2017 asking about crypto because I knew a few little things about it, but nowhere to be seen even now, you know, after it's gone up so much. So,
And that's an important point to note.
and also it came out of a COVID boom, right? It's like, you know, Bitcoin really
Totally.
took its big move after the COVID. So people are sitting there thinking the world's over, you know, everything's going to poop. So why would I invest in anything at the moment? To sit on the sidelines and this could be a buying opportunity for me if it drops more. But what happened? It blew up in everyone's faces.
But everything, look across the board.
Yeah,
Stock
Equities,
market,
equity market.
metals.
It's quite funny because if you were to look at a chart of, you know, almost all the big indices, as well as crypto and other asset classes, whether it's gold or silver, the V-shaped recovery is almost identical chart to chart, irrespective of security. And what does that tell you as a trader, kind of hyper analyzing it from a macro scale?
Again, this is why, you know, you say, well, is cryptos here to replace gold? Well, no, gold went up in a straight line. So did stocks. So did cryptos. All risk assets went higher. And one would argue it's Fed Powell who promised the world. You know, we were going sort of thinking out of disgust on how much money they pumped into the system, QE1, QE2, QE3. What we're doing now is dwarfing that. You know, we're doing more in a week than we were doing on months there. It's unbelievable the amount of money that's going into the markets from the Fed, from the central banks. So the environment is free money everywhere, lots of easy money. Interest rates are 0. People have this money, and where do they put it? Well, everywhere.
You couple that with stimulus checks.
Just buy it. And going forward, I'm expecting very similar this year. I think we're going to have a good year in cryptos, a good year in metals, a good year in the stock market. I'm anticipating 2021 to continue this V-shaped recovery.
Right, interesting. Well, I mean, so obviously you have the market side of it, but the big players in this particular story are the brokers. You know, your TD Ameritrades, your Interactive brokers, your Robinhood, so on and so forth. What I kind of, you know, found very interesting about what's going on currently is more specifically with the guys that, you know, are trading with Robinhood. You know, Robinhood has been perceived, you know, historically as, you know, the new age broker for millennials, providing market access, commission-free trading. You know, even the name Robinhood, it's indicative of, you know, taking from the rich and giving to the poor. But the irony is, you know, when shit hit the fan, as they say, you know, when it came time for Robinhood to show their true colors on whose side do we actually stand, you know, as soon as, you know, the big boys from Wall Street, the hedge funds got involved, you know, when Citadel gets involved, straight away it's a sellout. You know, we've got to put caps on this, drive the price right back down. And they frame it through the lens of, oh, we're here to protect you. You know, we want to make sure there's too much volatility. We've got to calm the market down. You know, not going to let you basically hurt yourself. When in essence, you know, they're meant to stand for total transparency and access to markets and enabling, you know, Tom, Dick, and his mum to get involved. So, you know, this is particularly relevant to us, I think, because we're a Forex broker and a Forex CFD provider. So we, you know, kind of, feel the pain of these retail investors, what they're currently going through in our own space. And I guess like my question to you guys now would be like, where do you think, you know, if Robinhood was not that, you know, holy grail broker that really, you know, it doesn't really stand for what they claim to stand for, you know, at least as it appears currently, you know, where do you see the brokerage business going from here?
I personally see a lot of people that have been trading on Robinhood and seeing that they got shut down, thinking, where can I go and do the same thing where I'm not going to get shut down? And to me, that's crypto. But this could be just a short-lived thing.
They shut down crypto. They shut because crypto, you shut down the on-ramp, and you know you can't buy anymore, right? That's how they squashed in 2017.
More so like right now, you can still get your money in very easily into Binance or any of these bigger exchanges and, partake in the same kind of pumps that are happening
But they really
across
have
the stocks.
started at the crypto space, going after Doji. But in essence, one of their big objective is to take it to the bankers, to take it to Wall Street. So will they get that same satisfaction, or will they achieve the same goal if they pump cryptos?
I think.
Yeah, and the thing is, what's scary is that what Wall Street has shown us is the tremendous power and influence they have over these brokers who are ultimately the ones who are providing access that can make this all possible. You lose your access to trade, you lose your access to really have any effect, and you go back to that pre-08 powerlessness.
But just to touch on that again, what you might find is they might pump a silly coin, call it Doji again, to stupid levels, go, look, this is our power. This is what we can do. It's almost as a token to say, this is how strong we are.
Yeah.
And then they'll go after the stocks again. So
The candle is the biggest middle finger you'll ever see.
Right. That's why I do think they will go after the crypto space, but I don't think they're going to turn their sole focus there. I think they are going to keep looking for the stocks that are heavily shorted and go after them.
At the end of the day, people go wherever they can trade. For example, you've got different regulators out there putting leverage restrictions, and what happens is that people move offshore into unregulated brokers where they can get access to higher leverage. So an example like that, even if the government's come after crypto exchanges, I think then the next step will probably be decentralized exchanges. Yeah. And then I'm just like popcorn value wise, I'm interested to see what that looks like.
So there's a great question. Can this be stopped? Yes, they can put out fires. Yes, they can keep shutting down or stopping stocks. But the more they do that, is there an argument to say that they're going to get more followers? They're going to get stronger. If they get more riled up, the more they try and stop them.
Because it's a cult-like mentality, the decisions and the perception around your brand and broker, means everything. So, Robinhood, which, has been massively supported by heaps of retail investors, most of which are getting into the market for the first time and are basically doing their market analysis on Reddit or other forums like it.
And also go on, sorry.
So, so now you have this story where, companies like, whether it's Robinhood or Interactive, so on and so forth, they're at a crossroads between deciding where are we going to go? Are we going to risk losing, a big percentage of our clients, or are we going to, risk, not satisfying our market makers? It's almost like it's a very tough kind of, balance to strike right now.
They were put in a hard situation.
Yeah.
I'm not saying they made the right or wrong decision.
But we still don't know why they made the decision, right? The CEO went on TV.
Well, they framed it through the lens of capital requirements and SEC requirements.
It's very cagey.
But everybody really knows what happened.
Let's not beat around the bush.
Gabe Plotkin got in contact
someone
with
lost
Citadel.
Money, and someone made a phone call and said, "Stop this."
Yeah,
I mean, look, when you have one market maker who's taking 60% of your flow, they have got massive influence over your business.
Completely.
Because they're almost it's an existential crisis if they were to lose.
So here's probably a very different question to answer. What do you do in that situation as a broker? You'll get shut down either way. You're either going to lose all your clients, or you're going to get shut down. Perhaps the ethical approach would have been to side with the reason and what they all started with.
1 second. If you have a brokerage that has, 25 different liquidity providers that are pricing in.
Sorry, just quickly, or else Robinhood could tell them to stick it because they're the country's...
Stand by Robinhood, their values.
Well, pretty much they're the world's largest, online stockbroker.
So why do you think they did it?
Why wouldn't
But
you
no one
tell
would
them?
back them. They'll be finished anyway. They'll run out of liquidity. The bankers will all stick together. The funds all stick together.
That's what that's what it seems like to me, especially when the whole system is built by design because the market makers are in bed with their hedge funds. So anywhere you turn, the system is rigged against you. Let's even say Robinhood wanted to do the right thing.
Correct.
And, I really think they did want to do the right thing in terms of where they ethically where they fell on the issue. But it's almost like they really do have a crisis on their hands right now. What do we do? Are we going to upset our market makers, liquidity providers, and investors? Or are we going to upset our client base? And there's no good outcome.
Correct. And that's what you saw.
Perhaps the onus is then on Robinhood to evolve and to actually do their own market making,
but this
instead
is
of just being a technology layer.
They should have enough money to put something together.
Do you
right?
think it's already too late? Do you with your experience, working in brokerages, do you think that there is going to be a mass exodus from Robinhood that's going to due to the brand damaging that they've taken?
I think people will understand that there's no such thing as a free lunch. So if you're trading, they've made an exchange traded market with best execution principles, OTC. Trading exclusively through a market maker with full, discretion over the execution, and therefore you're kind of reliant on them wanting to execute a trade at all times because you're always crossing the spread, they're always filling it for you. So I think people will now be wiser to that fact and say, we want best execution, we want, to always hit the market. If a market maker is sitting on one of the exchanges, so be it, but, now they've kind of learned, I guess, the hard way that
Yeah.
like a little bit as to the way the market is.
Do you think
actually.
there needs to be like a
I just wanted
decoupling
to-
between the hedge funds and the market makers and the brokers? Do you feel like there needs to be a decoupling so that these entities can stand in their own right and that there is no conflict of interest?
I think what you're saying essentially is the system, the way it's by design, is always means that the big institutions,
Correct.
the big guys will get saved.
Correct.
And that's what you've seen here. So perhaps the industry needs to look at the whole structure. But that's just, we go back in time. It's
Or just maybe all it needs is more competition. Because technically,
I don't think that will change it, though.
Foreign exchange operates on the same basis, but we've got 26 LPs that can take over at any one time. If Citadel was the top of our book and 6% of our business, then that would be a risk, right?
Correct.
And if we didn't have someone else that could, come in there, then we wouldn't have the ability to say, see you later, someone else can take the business. So here it's like a double, they've been screwed by, the conflict of interest because of Melbourne, Citadel, and then them taking a huge share
And
of
that's
their
what I'm
book.
saying. If
So-
there is going to be a restructuring of the conventional system, then I really feel like there needs to be a decoupling of everyone being in bed with each other, which leads to massive conflict of interest between ultimately clients, investors, market makers, so on and so
retail
forth.
always get stiffed when there's that
Yeah.
conflict of interest, right?
But that's the thing. The
And that's-
closer
I mean,
the
that's
broker
the-
is to the client in terms of, you got the closest is the B book, right? Obviously, that's like, the broker taking the other side of the trade. Then the other side of things, the next step is, having a market maker on the
And
end that you're in
payment for order
cahoots with.
flow and
Yeah.
blah, blah, blah.
But if you look at like what you were saying before, if you can distribute that flow across, 25 or more different
you remove that conflict of
places,
interest.
it's
And
exactly,
if there's
yeah.
Or at
even
least
if there's
no
a related
one
party
market-
transaction
yeah.
behind
Yeah.
the scenes, it's like,
and also,
well,
at least no one market maker has that much sway over a particular broker that's going to have massive implications for hundreds of thousands, if not millions, of retail traders that are going to get screwed by, the pressure which is being applied. So, yeah, it's definitely interesting, scary times. Very little forward
I think
visibility.
it's fascinating time.
It's fascinating, yeah.
So I think Wall Street bets should go after conflicts of interest, and where they can see a conflict of interest and a short position on the other side of it, that's where they should stick the middle finger.
But
Because
there's no telling where this may go. It could very well go there. You could very well see
if they want to rewrite the nature and fabric, as Sammy would say, of Wall Street, then stick the finger where it's needed most.
I mean, and the irony is, like, I don't think it's for no reason that, there is this coupling of your market makers, with your hedge funds, with your broker, because, by design, at the end of the day, what we're seeing is that the big boys, when there's no conflict of interest, it's all good. But the moment that it's either the retail investor, the small players, or the big boys will, 10 out of 10 times be chosen over little boys. And,
Well, you're
Time
right.
for a change. Time for a change.
You're
I
right.
thought you were going to say
but-
lots of talk about boys, and I was like,
yeah, or boys and girls.
Not a
or-
race, Sammy.
and
That's going to be
others.
another podcast.
But the question is, will they be able to
Got
stop
the
them?
right shirt for it.
That is the real question.
Sorry. So, no, we can cut it. Go, say it again.
No, I said the real question is, yes, they will always take the side of the big guy, but can this movement be stopped? Will they be able to stop it, or are we going to see?
Well, if they can't trade, then it has no effect. There's no power.
Robinhood's not the only trading platform. They can find
Right.
other trading platforms and push it there. Don't forget, these aren't little boys anymore.
Correct.
They've actually made a lot of money on game, and their armor's getting bigger. So the more stocks they squeeze and the more plays that they make, maybe they'll use the crypto market to increase their bankrolls.
Wow.
These guys can just get more and more
mean,
powerful.
The small guys are now doing what the big guys are doing. basically.
You tell me, you have banking experience, big shop experience. Do you think what's going on now, what's playing out in financial markets, is going to cause the big boys to blink and almost alter their strategy entirely, the way they approach equities, the way they approach, all financial markets?
I think it has to.
I mean, do you think this is enough for the banks to basically take the retail investor seriously enough to really alter the way they do business?
Well, again, it's we went before 2008. Why did we crash? Because everybody got greedy. You could just push a market, dominate a market, and people lost sight of what the actual economy, what the actual market was. So I think this is a warning sign that don't get overly exposed in a stock because you can get squeezed out. Because they knew there was no one big enough to squeeze them out because they're all playing the same way.
Make sure you use stops.
Well, of course, I think there'll also be.
I don't think stops would help you in this
No.
case.
No. Well, they would. You'd get stopped out if you had it early. But I think there'll be a position size. It'll be like, we actually need to watch on one. We're going to monitor more positioning. We can't put 50% or huge positions and then double down, triple down, and push it in a direction because this can happen. It's a reminder. It definitely is a reminder. And I definitely think some of the risk managers will be rewriting their books or reminding them that it's not all about greed. And that's what they've done for the last, since the 2008 lows. The stock market's been up in a straight line, and the stocks that they wanted to short, they did short, and they can dictate it. And I think it's a warning sign.
Interesting. I think we can maybe stop it there even. What do you guys reckon?
Yeah, you reckon an hour? It was an hour? Was it
10 seconds short of it, yeah.
Sweet.
Fuck me.
That's
All right, we got.
also, like straight recording as well.
Yeah, we got to do a quick outro. Just like. Say,
Okay.
Yeah.
So if you're listening to this, we really hope that, this discussion's provided some kind of, insight or value to you. And yeah, we definitely want to encourage, people who are, listening to this or watching this to get involved with the discussion. We'd love to hear from you in the comment section. And stay tuned for more, more of these types of discussions. We really are all about transparency and trying to bring as much information to the table as possible. So if you like what you see, Jeremy, we'll take it away.
Yeah, I was going to say, also please let us know in the comments. I guess we're going to post this on YouTube and on the podcast as well. Let us know in the comments what you'd like to hear from us on. And of course, we'll put a link to the Discord below the video. It's a place where you can join other traders, other clients of ours in discussing these concepts. And of course, we're also personally available to discuss with you anything you want. So
And
hit us
Mr.
up.
Wizard, if you're watching.
Mr. Wizard?
Yeah, Mr. Wizard.
Time to come.
Roaring Kitty.
Yeah, true. Roaring
Roaring
Kitty.
Kitty. You did good, kid.
Wow. Thank you so much. We'll see you soon.
Cheers.
Nice job, guys. Greg, we should have you on these more often.